Hello. I'll share a little bit about myself before getting into the presentation. I graduated from the University of Ottawa with a Bachelor of Commerce degree and have been part of the local investment community ever since. I left a bank-owned firm in 2012 to join Richardson Wealth and have been providing clients and their families with personalized advice on all facets of their financial well-being. I've been fortunate to work with the Dementia Society and their finance committee for many years, providing guidance and advice on a monthly basis. I've experienced dementia personally in my family and have also helped clients who have faced dementia in their daily lives too. So whenever I get the opportunity to help the Dementia Society, I'm happy to do so. So why do people give? Giving promotes feelings of happiness. We all know helping others feels good. It's rewarding knowing it helps charities continue their vital and important work. There's financial benefits when you donate to a charity. When you donate, you receive a tax receipt, which you can apply to your tax return and receive a tax credit for up to 50% of your donation. Lifelong benefits when you donate your time. If you're not able to donate financially, you can volunteer your time instead. Meet new like-minded individuals that care about the same cause as you. Donating gives you the opportunity to show gratitude. The act of donating to a charity reminds us of all that we have, and it's a way to express our feelings of gratitude in return. To make an impact. When you can clearly see how your money will make a difference and contribute to positive change, you're motivated to donate, and possibly on an ongoing basis. And finally, relatability. When you have been through an experience that relates to the charity you're helping, you can deeply empathize and it instills the desire to help. There's many different ways to give. So during our lifetime, you can donate directly to charities through a cash donation, a donation of publicly traded securities, a donation of property such as land, art, or collectibles, donation of new and existing life insurance policies. If a charity becomes the owner and beneficiary of your policy, annual premiums paid by you are eligible for the donation tax credit. This arrangement can be set up from the inception of a new life insurance policy or transfer ownership on an existing policy to your favorite charity. You can also donate employee stock options. If you're a member of your employer's stock option plan, making a qualifying charitable donation of exercise shares can reduce your taxes. You can donate individually, or you can set up a vehicle to meet your charitable objectives. Vehicles such as private foundations, a donor advised fund, which is a public foundation. You can also make a difference through coordinating or participating in everyday activities like a bake sale, an office fundraiser, an art show, or even fun events like the Ottawa Race Weekend. Finally, you can give your time, energy, and talent as a volunteer. At death, giving can continue. In your will, you can designate named charities to receive gifts such as properties or securities. You can provide gifts from your estate to your private foundation or donor advised fund. You can designate life insurance and make the charity the beneficiary of an existing policy. This is a good option if you already have a policy in place that your family no longer needs for financial stability. At the time of your death, the charity will receive the policy proceeds and your estate will receive the tax benefits. Designate charities as beneficiaries of your RSP or RIF. This donation occurs outside your estate, so it is also an effective way to reduce probate fees in provinces where they apply. Also, your estate will receive a donation receipt for the value of the plan on your death, which will reduce your tax payable. Now we're going to talk in more detail about donating publicly traded securities. This strategy that many individuals and investors aren't familiar with, and it can have such a financial impact for the charity and on your personal tax situation. So rather than donating cash, a check, or sending an electronic online donation to a charity, It's often beneficial to donate securities in kind. What in kind means is that you're transferring the actual security or shares. So they're not sold, but rather delivered as is in share form directly to the charity. You will receive greater tax savings by donating securities, opposed to selling the investment and donating the cash proceeds. This strategy only applies when donating shares that have an unrealized capital gain in a non-registered or taxable account. The real benefit is you are not taxed on the capital gains when making the donation, and you receive a donation tax credit. This tax benefit does not apply when donating shares from a registered account, such as an RSP, a RIF, a locked-in registered plan, or a TFSA. Donating securities allows you to effectively give more money to the charity while reducing your personal tax. Next, let's look at a numerical example to illustrate the benefits of this type of donation. In this example, let's assume we have an individual resident in Ontario, and this individual pays tax at the highest marginal tax rate of 53.53%. And this person wishes to donate $5,000 to charity. Let's look at the two ways you can make that donation. Well, the first way is to sell the shares in your investment account to create cash to donate. Or you can donate $5,000 worth of publicly traded securities to a charity who can accept them, like the Dementia Society. You'll see on this table the results. When you sell securities of $5,000, and let's assume the adjusted cost base on those securities is $1,000, the individual will realize a capital gain of $4,000, of which $2,000 is taxable. This creates tax payable of $1,071. The individual will still receive a donation tax receipt for $5,000, and that will create a donation tax credit of $2,465, or approximately 50%. It will wipe out the income tax that's generated on the deemed disposition or capital gain. So when you're looking at the cost to the individual of making a $5,000 donation, you'll see it's just over $3,600. Now, if we look at the second way to make a donation, which is the individual donating publicly traded shares as is, meaning they are not sold, but rather transferred to a charity in share form. There's still a capital gain of $4,000 that's deemed to be realized, but our tax rules provide for that capital gain to be non-taxable. The individual still receives the $5,000 donation tax receipt, generating a tax credit of $2,465. And therefore, in this scenario, the cost of the donation to the individual is just over $2,500. This individual saves $1,071 by transferring and donating shares in kind. While I used $5,000 donation in this example, an in-kind donation of shares of any amount will help your charity and you'll pay less in tax, resulting in a winning scenario for both parties. If you'd like to discuss how making an in-kind donation benefits your personal tax situation, please feel free to contact me. You may be wondering, how can I make an in-kind donation to the Dementia Society of Ottawa and Renfrew County? I've listed 3 simple steps here on how to accomplish this. The first, visit the Dementia Society's website to download the stock donation transfer form. I've provided the website here, or you can hover your smartphone app over the adjacent QR code image. If you'd rather talk to someone personally, please reach out to Ashley Palata and she can assist. The next step would be completing the stock donation transfer form. You can do it on your own, but if you need assistance, please feel free to contact a member of my team, Sasha Peloso, and she'll happily assist you with that. Then you'll contact your investment advisor or financial institution and provide them with a completed stock donation transfer form. The final step is to ask them to forward these instructions to the Dementia Society's advisor of record, Richardson Wealth. This information is clearly outlined on the stock donation transfer form. A reminder, to take advantage of these tax benefits, the shares must be transferred in kind to the Dementia Society and not be sold by the donor prior to the transfer. So, donation processing and receiving. The shares you have donated will typically be received to the Dementia Society's account at Richardson Wealth within 3 to 5 business days. Once the shares are deposited, they're immediately sold, and within a few days, the proceeds are transferred to the Dementia Society to directly fund education, provide support, and activities for people impacted by dementia in Ottawa and Renfrew County. Tax receipts are issued from the Dementia Society for the fair market value of the donated shares. Tax receipts for a donation of securities are sent by regular post to the donor and received within a month. Here I've shared 3 commonly asked questions that I receive. What is a qualifying security? Shares that are listed on a qualifying stock exchange. Shares such as BCE or Loblaws, for example. Debt obligations such as bonds and debentures. Shares of a Canadian Public Mutual Fund Corporation and units of a mutual fund trust. So how do you know which securities are best used for your donation? You can ask your investment advisor or simply review your monthly statement and look for any securities that have a large unrealized capital gain. The true benefit of this strategy is to reduce taxable capital gains in your hand while also facilitating an efficient tax donation. Is there a limit to the amount of my donation in any year? Yes, annual donations during your lifetime. The maximum charitable donation for tax purposes is 75% of your net income in the year the donation is made. If a larger charitable gift is made in the year, you may be able to carry forward the excess donations to use as a deduction for up to 5 taxation years. Up to 100% of a taxpayer's net income can be claimed as donations in the year of death or in the prior year for purposes of calculating the donation tax credit. Tax treatment of donations made in a will after January 1st, 2016 have made it easier to claim the donation tax credit. However, certain requirements must be met, so you should discuss with a tax professional. In summary, I've outlined the many benefits of giving to a deserving charity like the Dementia Society. Some benefits are financial and others are emotional because it feels good to help others, knowing you're making a difference for many. Thank you.